Good morning, this is John Piper with the weekend video clip, and it's Saturday the 15th of February. And I thought we'd start today with a shorter term chart of the DAX from IG. I mentioned in a recent report I'm doing some research on shorter term trading, and this is a good example. We're looking really at this day here, which is the 14th, yesterday. Memory is failing. Anyway, basically we saw a crowd gap trade. It got closed. One point on that is that the low on the IG chart was such that there was no trade because the tradable gap was less than we accept. But on the cash chart, you've used a cash chart, the low was much higher, giving a very acceptable trade. And there's no reason why you can't trade IG off the trade Zeit gap, which I still call crowd gap, off the cash charts. I use that as a trigger, but use IG to take the trade if you want to do that. But there was a trade here. This is not actually the main point of this this discussion, but I thought I'd just mention that. The point is, we then saw a bounce or fail break below the key level, 9,600, round numbers of key levels. And you notice that this green bar here, with a low at 91, high around 99, just an 8-point bar, was quickly penetrated to the upside. Now the point is that is a fail break, as I said, and you got a sort of failed downtrend, looked a bit corrective. I think it's an ABC, in fact. We'll look at that in a minute. And if you'd gone long here, as I did in fact, you got a really close stop of 10 pips. Now I was a bit slow actually yesterday. I didn't get in until 9,610, so my stop was 20 points. But and of course this makes a huge difference when it comes to size. You know, basically, whether you make money in the markets is all down to the size you trade. Basically, if you spend 5 hours trading the markets on a day, and you're trading £2 a point, then you may end up with 100 quid. Trading £20 a point, you may end up with £1,000. I'm not trying to ignore the losses here. I'm just trying to make the point that if you've got size on your side, then you can make a lot of money. If you haven't, then you can't, and it's as simple as that. And size is the key issue. So if we look at this trade here, with a 10-point stop, you could trade £20 a point, risk £200. With a 20-point stop, you can trade £10 a point, risk £200. So same risk, but of course you've got half the size. Also, the other point is that you become a little bit of a weak holder. You can do, in the sense that if you're getting in here, then up here you're quite happy because you're in profits, and this little blip down here is not going to be any problem at all. Whereas if you get in up here, and you're trading in a size that you could be uncomfortable. I mean, obviously, the higher you get, it can be uncomfortable, especially to start with. And this is an issue with markets that the psychology of money is a very complex thing, and it's affects all of us differently. And if you trade in a higher sum or increase your sum from your current comfort level, which is all it is really, it's a comfort level, it's a habit, then you can find that you get a bit jittery, and that doesn't help your trading. You've got to be relaxed when you trade markets. But of course, this little spike here merely confirmed the signal. It just confirms a trade. Don't want to get stopped out by that. And what you do is you can actually raise your stop. I then had to go out, in fact, so I put a limit in, put it up around here somewhere. Almost within seconds, the thing leapt up to about 60. Anyway, it was a really good trade. It just shows what you can sort of achieve in short-term trading. And over a course of less than an hour, that trade was done and dusted. And it's something that could make money for the week, in fact. So that's the business of trading. I think that's what we're all trying to achieve, really, is spend less time trading, making more money. You don't need to trade more than once a week at the right size, or once a day, really. But of course, the problem is you've got to wait for these things. You've got to see them. Often they come in at the open. I mean, this is a sort of almost an opening trade. These are 5-minute bars, so the key little bar there was around 8.20. You don't see it every day. The market will not give you this kind of thing every day. But and of course, what I'm talking about here is all the techniques in the way to trade, which I wrote 1999, 15 years ago or something. Coming into play, the failed break, failed retest, all this kind of stuff, just played out on a much shorter term canvas. Okay, here's a 10-minute chart of the same day's action. We actually had an ABC down to here, not very clear, but fairly clear to there. Then a 1, 2, 3 to the high yesterday, so that's why I thought this was probably a fourth wave, and that another reason to buy the market at that point. So look at the longer term pattern. Okay, on the DAX, as I said before, ABC. Now this very strong rally, which I guess we can see new highs. I mean, it seems to have got pretty high up. Other markets don't quite confirm that picture, but right now there's going to be nothing to stop this going ahead. Let's have a look at the even longer term. Okay, on the weekly chart, if we take from this point here, there's a 1, 2, 1, 2, 1, 2, 3, 4, maybe 5. So we are due at 4 and another fifth wave. And of course 10,000 is beckoning. These round numbers do have a magnetic grab for markets. So DAX 10,000 would seem to be, I won't say it's likely, but it's certainly something I would put into my calculations. So I'd say new highs on the DAX is likely. Okay, very different picture on FTSE. We've still got this 5-wave decline there. Still got this sort of diagonal type thing to there. We broke through the diagonal, and now we're still trying to break through. We actually are closed almost bang on the diagonal, so it's a very different pattern. A pullback next week would just confirm negatives really. So we'll look at the short. Also a possible 1, 2, 3, possibly regular 4, and then a fifth wave. So we have in fact got a possible 5-wave decline here, but this looks quite sharp, and it's started to drift. But again, pullback here. 200-day moving average is not far away. Sorry, the 200-day moving average is around 6550, so it's a bit lower down here. In fact, so but again, it's a sort of even if it's an ABC, then that would perhaps be reached. But I think there's a possibility of a pullback next week. I say the DAX looks good, doesn't mean it can't pull back also down. Right, we've discussed the slightly two-way nature of the decline. So it could either be a 5 or an ABC. We've now got a 1, 2, maybe 3, 4. I think there's a case as a fifth. So again, there's a case for a pullback there. I'm right on this this green line. So I'm not sure what it is actually. Never mind. It's probably irrelevant, so forget about that. But there are 5 waves. So again, I think there's a case that we can see a pullback next week. It may just be corrective before we go higher. But FTSE looks a lot more negative. Right. Finally, a quick look at gold. Well, gold's being ahead of steam. It could still be a C wave as discussed. ABC. A, B, C. So it could end up being some kind of flat, but there seems to be a good case going around to 1440 or thereabouts. If it can continue beyond there, then we could indeed see a new bull market for gold. So have to see how that goes. But right now it's looking pretty good. Okay, that's all for this weekend. Hope you found it interesting and useful. We'll be back with the opening report on Tuesday morning. Have a great weekend. Thanks for listening, and bye for now.